And so it begins.
Feel stuck with your finances? Move your money to SoFi and feel what it's like to get your money right.
I jump up on the stage and do my money dance.
Move your money to SoFi and earn up to 1% APY when you sign up for SoFi Checking and Savings.
For the last year, I've been telling you all here that when SoFi becomes a real bank, a nationally chartered bank, like the JPMorgans and the Wells Fargos and all the other banks that you know of, they will outcompete them by leaps and bounds with all the incremental services that they can provide to their customers, their members, at better rates because they get to cut out the middleman. I've been saying that since SoFi announced that they were acquiring Golden Pacific Bank of Sacramento, California last year as a holdings company, holding an actual bank, which would allow them to get rid of the middleman that they used to use to give them loans and to custody their investments and all of the other services that they provide to their customers in a one-stop shop online bank. And now that SoFi is a nationally chartered bank, as we covered in previous videos, you should go watch those if you haven't. Now that they are fully a real bank, unlike the vast majority of other digital banks, now that they can cut out the middleman, they are truly the only one-stop shop online bank. And we're starting to see what that actually means, as we predicted would happen, as they told us would happen once it was closed. And just a few weeks ago, they closed it. And now, just a few weeks afterwards, they come out and say, hey, we're now offering 1% interest rates on our savings and checking accounts. That's unheard of. The other banks, the traditional banks, they offer you, get this right, 0.01% interest on your savings. Just your savings. If you're lucky, you just might hear of their new branches that are more digital that offer 0.55% interest rates on your savings. And at the top, you might have online digital banks like M1 Finance who offer 1% on interest. But then again, those are not actual banks. They're neobanks. They don't have the services that SoFi does. They don't have the value that SoFi does by being an actual bank. They don't have the one-stop shop nature of their services. You might go to them for investing and 1% savings, but you can't get a loan from them. You can't do robo-investing. You can't do passive income on their dividend investment fund, ETFs, which SoFi has. You can't get a student loan from them. But on SoFi, you can, because they are the one-stop shop online bank. So SoFi now offers 1% interest on your checking and savings to go along with home loans, mortgages, right? To go along with investing accounts, stocks and cryptos, and car loans, and student loans, and robo-investing, and passive income, and so many other things that SoFi offers. And you just won't find this anywhere else. But if you do, if you by some chance you find all of this in another online bank, digital bank somewhere else, they offer everything that SoFi does and more. If you find that, you just might come to find that they use SoFi to do all of that because SoFi owns Galileo, the infrastructure for financial tech, for digital neobanks. 95% of the world's neobanks run through SoFi's Galileo, which they acquired in 2020. And we've covered the importance of that in so many videos, including our SoFi Will Be Everywhere video. Because the premise is that regardless of which online bank you use, if it's not SoFi, it's still SoFi because they all run on SoFi's Galileo. So SoFi's able to do all of this, plus now they're fully a national bank. And we're now seeing it play out as we predicted it would. First, they're going to offer you the 1% interest rates. And then they're going to take all those savings that they have acquired by becoming a bank, a real bank. They're going to move that to their home mortgages and their personal loans and their student loans, because now that they don't have a middleman, they can offer you all those same loans without the middleman's fees. And so they can both offer you lower interest rates on loans, which is good for you, but also increase their margins at the same time. It's magic. They do all of this because they're customer centric. That's the whole point of all of this. They want to best serve the customer, and they do that by increasing the value of their services while increasing their bottom line. That's not how it's supposed to go. That's not how it usually goes. Usually businesses will lower the value of their services in order to increase their bottom line, to increase their margins, because they have no other choice. That same goes for the neobanks that you use, that you might use that are not SoFi. They are using SoFi, which means that they're not SoFi, which means that they can't afford to lower the cost of their services in order to increase the value of them, because they don't own the underlying infrastructure. SoFi does. So SoFi wins no matter what. It's wonderful, isn't it? TransferWise, Revolut, Chime, Dave, Vero, any debit card or credit card that you see online or on TV ads. Whenever I see one of these TV ads that say, oh, this brand new debit card or saving account for kids for moms and dads and grandmoms and your uncles and whatever, and Latin Americans and Africans and whatnot, right? All of those accounts, I look up immediately, does this company use Galileo? And more likely than not, because 95% of the time, it's going to be true, that they use Galileo, which is owned by SoFi, which means that they're using SoFi, which means that as an investor, I'm happy because I'm investing heavily into SoFi because I believe that SoFi leveraging its bank charter plus its technology platform Galileo, and now they're adding Technesis, which we're covering in a video, or we have, depending on when you see this video or when we get this out, but they're adding to their technology platform. Because of that, they will get more members and they will learn from all of their customers, the B2B customers around Galileo and Technesis and all the technology platforms. They'll learn from all those customers how to better serve those customers, what those customers need to succeed in their money journey. And as they learn all of that, then SoFi can say, hey, we haven't done that yet. Let's go do it. Looks like Robinhood's customers need that thing. Let's go build that on Galileo in the cloud and then offer it to all of our customers so that all their customers could use it, and then we can learn more. And then we could tell Robinhood and Chime and all the others, hey, this is what we're learning. You need to do this. So here it is. Here's how you do that. And now we're all competing in the market, but we're providing the services that enable that competition. And because we provide that service, we get paid for that. Our revenues grow, our top line grows, and our bottom line grows because we're decreasing the cost of our revenues, increasing our margins. Because over time, as we learn how to better serve our customers, how to do that more efficiently, we lower our cost. And because we're vertically integrated, we don't have to pay Galileo, we don't have to pay Technesis because we own them, we are them. We learn how to decrease our cost. And we can decrease the cost for our competitors too, but...
Hey there. I just want to ask a quick favor before we continue. First, thanks for taking your time to watch this video. We hope you're enjoying it because it was a labor of love to make. You can help us continue to make more videos like this by simply liking the video below, subscribing to the channel, and commenting any thoughts you have. Even if you just want to say hi, it truly helps the channel grow and is important to the YouTube algorithm. So before we continue with the video, please don't forget to like and subscribe if you're enjoying it. Thanks in advance, and let's get back to it.
At the end of the day, we're going to give ourselves a better deal because it's us. We're not going to overcharge ourselves, right? And even if we're talking about overcharging or not overcharging or just being good people, regardless, we're integrated by the nature of not having to do sales and make deals with Galileo or Technesis. We don't have to pay salesmen to go negotiate deals with our infrastructure companies because we don't pay them. We are them. And so back to the National Bank Charter, we're seeing the 1% interest rates. And you'll go on NerdWallet and you'll look up, hey, what's the top interest savings accounts? And NerdWallet will tell you all these different bank accounts, 8 best savings accounts for February of 2022. And they all say you have Marcus by Goldman Sachs at 0.5% interest rates. And then you will have Alliant at 0.55% and Discover at 0.5% and Synchrony and all of and Chime at 0.5%, Barclays 0.55, and Axos 0.6. They don't list SoFi on here because all those banks are trying so hard to still appeal to customers by lying to them, because they're doing deals with NerdWallet and they're telling them, hey, if you list us over M1 Finance, who offers 1%, while we offer 0.5%, and SoFi, who offers 1%, then we'll pay you to write that article about us and list us in your listicles every month. They have to do that marketing because they don't have anything else to go off of. They don't have the truth. SoFi offers better rates. And over time, as SoFi becomes a household name with their SoFi Stadium, which the NFL Super Bowl was just played in, and the home team won, the Rams, at SoFi Stadium in Los Angeles. As people learn more about SoFi, the marketing becomes cheaper, the name recognition increases, and people hear about SoFi's savings rates. And when they see these bogus articles, they'll say, hey, that's not true. SoFi offers everything that they offer and about 95% better or 100% better interest rates on their savings and check-ins with no minimum fees, no hidden fees, none of the tricks and scams like Wells Fargo. They offer all of that. Why aren't they on this list? Oh, that's right, because the old guard still has lots of money to spend on marketing, to waste on just tricking people into just becoming their customers, instead of spending that money on increasing the value of the services while still increasing their margins. And so we're going to see this play out more and more. It's going to take a couple quarters to see all of this play into SoFi's revenues and bottom lines, but it's starting now. And next up is the margin accounts, the margin investment accounts, which I'm iffy on, but people want it, so if they offer it, great. But they have to do it safely. I'll talk about that more in another video. But with that, they're going to also offer better rates, fees than other investment brokers, because they can afford to, because they're a digital bank, which means that they have a lower cost of revenues. And now that they are an actual bank plus a digital bank, they can also offer better rates because they don't have a middleman anymore. They don't have to pay an actual bank because they are the actual bank. And they can custody their own customers' funds and deposits and investments and say, hey, you want to borrow margin? We'll pay you. We'll charge you much lower fees, 50% lower than the others. They will do all of that. Margin accounts. They'll add options trading. They'll lower the cost of their loans, and over time they will get more and more customers, more members. They're at 3 million now as of the last quarter that was reported. But in March 1st of 2022, we'll see their new numbers, how many customers they have. And they're adding hundreds of thousands of customers every quarter. And so over time, this will accelerate. This growth will accelerate. The flywheel, we've talked about it so many times. They'll get more customers in the door with SoFi Money and SoFi Relay and SoFi Credit Card and so many other things. And then they'll upsell them on loans, because people need loans to do things like buying a house and renovating that house, like I am right now, which is why I'm up here instead of in my office, because I have people building my duplex downstairs using SoFi's personal loans, which was a great rate for us. And we're paying off using our SoFi Money account as we invest using our SoFi Invest account and Robinhood, but we can do both. Over time, if we need more loans, it will come cheaper because SoFi now can afford to give me a better rate and then keep me longer, keep me happy. And I'll tell my friends, and I'll tell you, hey, you should check out SoFi. Maybe it'll be better for you. If it's not, hey, no harm, no foul. Go use the other one if you want to. But at least check out SoFi. They might be what you need. And you'll check it out. And then you'll fall in love with it. And you'll tell your friends. And the network effect continues. And then the flywheel plays out. And then we get to 4 million customers. Then we get to 5 million. Then we get to 10 million. And then 20 million. Because there's millions and millions and millions of customers who are trapped in the traditional banks that don't really care about them too much. They just want to milk them for their money, which is why they don't give them any interest rates. They give them 0.01%. 0.01%, that's 100 times less than SoFi offers. Because they don't care. They don't know their customers. All they want to do is milk them. Excuse me, I get a little excited when I'm talking about all the scams and just, yeah, I don't like the traditional banks, obviously. So all of them have so many customers because that's all people ever knew. And then SoFi comes around and they say, hey, Why are you doing all this? What's with the billions of dollars you guys make in overdraft fees? You're charging someone $75 because they try to take out $25 and couldn't afford to because they had no money in their account, and so you're gonna charge them 3 times what they asked for? That doesn't seem right. And if they choose to stay with you and save their money in your savings account, you're gonna give them pennies? That doesn't sound right either. And you're gonna force credit card accounts on them even when they had no idea what's happening. Wells Fargo? That doesn't sound right. That sounds downright illegal. Why are you guys doing that? And you guys don't offer them student loans and savings on those loans when you do, even though they're your customers. We get them savings, sometimes 0.25% on the interest rates that we charge, because they're our members. We care for them. If they stay with us, they're happier. There's less work to do. There's less paperwork because we already know everything about them. We can just write them a loan real quick. We don't have to ask them what their credit score is because we already know it. We don't have to ask them what their income is because we already know it. We don't have to ask them how many assets they have, how much they have how much they have invested, because we already have that information. We don't have to ask them what all their assets are because we already have all that information in SoFi Relay. We don't have to ask them what are the loans they have because we already know all that information. So we save all that money on origination fees, and so we don't charge them origination fees. Why would you charge them to get their business? They're coming to you to do business with you. You're going to charge them to just do paperwork? Why are you doing all that? Oh, that's right. Because you have to. Because you are paying employees to sit in bricks and mortar in order to interact with people who you can't even serve well. And that's to stay in line just to talk to a clerk? That sounds not right. If they need us, just call us or chat. We get the loan to them in a day or 2. Faster than you. You guys take a week and you charge more. None of this is adding up. So why do you guys have hundreds of millions of customers still in 2022? It's great because people are learning. They're going to see that you guys are crap. And over time, we're gonna steal all those customers. And if we can't steal some, hey, if you want to ever become a digital bank, guess what? I'm Lincoln, and you are watching bullacademy.org. If you enjoyed this video, please do remember to like it below, subscribe to the channel, hit the notification bell, and comment your thoughts below. All of your engagement means a lot to the channel and helps us grow because YouTube's algorithm won't recommend our videos unless you engage with it. Thank you, and now let's hop in. If you want to ever become a digital bank, guess what? We own the infrastructure that runs digital banks. We own the Galileos and we own the Technasis, and we're going to own everyone that you're going to need to best serve customers like we do. If you want to compete with us coming to our space, you're going to have to use our services because we own them. That's the genius of Anthony Noto. Just watch what happens over this year, over the next 3 quarters. And we're going to see SoFi's margins increase. We're going to see them get more customers because they're going to increase the value that they provide to their customers. And they're going to cut their costs. They're going to vertically integrate even more. Vertical integration of centralized services. That's what we talked about with Open Door. Similar type of company. And we're going to see the value of our stock greatly appreciate over the next 5, 10, 20 years as SoFi approaches the $400 billion valuation of the likes of JPMorgan Chase and the other banks that are 200 times more valuable than SoFi, 50, 100 times more valuable. Even if SoFi only reaches half of their value, we'll get 10x. We'll get 20x over the next 10, 20, 30 years. So I like owning a bank because as everyone's afraid of inflation, we'll see SoFi benefit from rising interest rates as the Fed tries to tackle rising inflation. Because as interest rates increase, people get more loans, and because they're getting fixed rate loans for 30 years and 5 years and whatnot, SoFi charges more interest because they have to, because the Federal Reserve increased their interest rates, and so SoFi has to keep up. But then once the rates go down, SoFi keeps those interest rates that they charge during the high interest times. And so they benefit. And then when the rates go down, they can tell other customers, new customers, hey, here's a better rate because the Federal Reserve reduced their interest rates. And so now you get a better interest rates. Oh, if you want to refinance from one of your crappy traditional banks into our new rates, Go for it. We're here for you, and we won't charge you any origination fees. Oh, and guess what? While you're here, we have a savings account, we have an investment account, we have Relay where you can manage all of your finances. Oh, and we get you car loans, and you want to go back to school, want a personal loan, want to renovate, all of that in this one-stop shop online bank called SoFi. I can go on forever, but that's the value of this national bank charter. And then, of course, the Flywheel and the Galileo and the Technasis, which we're going to cover in another video, or we already have. That is why I'm excited about SoFi. That's why it's by far my largest position. And as you can see, I've been a customer of SoFi since 2019 because I refinanced my Parent Plus loan for my college into SoFi. And then I said, oh, they have SoFi money, 2% interest rates. I can use that. And they have Invest, credit cards, personal loans. Why not? So I'm excited about SoFi because I use SoFi. I understand the business. I understand the people, the man behind it all. Anthony Noto, that guy's a genius. And what he's doing is just obvious, but other leaders aren't doing the kind of things that he's doing. When he came in to save SoFi in 2017, after the scandal, which we covered in the previous mini-series on SoFi, 2 parts, covering their story from where they came from, how they got into a scandal that almost wrecked the company with their old CEO. And then Anthony Noto comes from Twitter and NFL and says, hey, I like what we're doing here. I'm going to make this my life work. And I'm going to turn this company around. And then he did. Took them public. Go watch those videos. You need to. If you're investing in SoFi, you have to go watch those videos. All of our videos on SoFi, mandatory videos that you should watch. You need to know about this company if you're going to be investing in it for the long term. I hope you enjoyed this. And if you did, you know what to do. Like, subscribe, comment, hit the notification bell so you never miss one of our future videos. We're going to continue to cover SoFi and our other companies that we cover on this channel, and many other companies that you guys are all interested in. If you have a company that you think I should cover, comment below. I would love to hear from you. And as always, these videos are brought to you by our patrons at patreon.bullacademy.org, who support this channel financially and help me brainstorm new video ideas by sharing news, rumors, and new investment ideas on our Discord channel where we discuss the stock market every day. And we do our own research and then come back together and collaborate so we can all learn how to build wealth for the long term and retire on our terms. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.